Okay, hello ladies and gentlemen, and welcome to this webinar brought to you by FXStreet.com. My name is James Chen. I'm the Director of Technical Research and Education at FXDD. Glad to see everyone here. I've been away for quite some time from doing these webinars with FX Street, simply because I've been on an extended travel tour around Asia on basically a speaking tour. So I'm glad to be back, and I look forward to doing more of these webinars with FX Street. So, as always, this is my monthly webinar that I'm going to be talking about exactly how I approach trading the Forex market from a technical perspective. I'm going to be showing you a bunch of charts and show you exactly what I'm looking at. Lots of things going on in the currency markets. And I'm going to show you my charts to let you know exactly what I'm looking at from a technical perspective on the different currency pairs, especially the major currency pairs. So lots of good opportunities in the last couple months. And first of all, I'm going to show you, what I do in terms of looking at the market and how I approach trading from my own technical perspective. Okay, so let's get started real quick. Just first, a disclaimer. Forex trading is a risky activity, and I'm going to give you a few seconds to read through this, and then we'll move forward. Today's topic, once again, is finding high probability Forex trading opportunities, and that's exactly what I'm going to show you in these 45 minutes that I have today with FX Street. Now, if any of you are unfamiliar with who I am or what I do, just a quick overview of my background. My name again is James Chen. I'm the Director of Technical Research and Education at FXDD. I've been here at FXDD in World Trade Center in New York City for just about 4 months, and for about half that time I've been traveling throughout Asia, giving speeches and training people as to trading in the Forex market. Now, I've been an active Forex trader since the inception of retail Forex, using primarily technical analysis, although I do take into consideration fundamentals, but on a day-to-day basis, I am trading from a technical perspective almost exclusively. Now, I also trade equities, or I've traded equities and futures. Hopefully you can all hear me here. And if you have any questions, please feel free to type them into the chat window. I'd be more than happy to address them, time permitting. I'm also a chartered market technician, or a CMT, and a registered commodity trading advisor, or a CTA, registered here in the U.S. with the National Futures Association. I publish daily Forex technical analysis that you'll be able to find on FXStreet.com, as well as on our website at FXDD.com, and many different other places. I've authored numerous articles that you'll find in Forbes, Forbes.com, Futures Magazine, Technical Analysis of Stocks and Commodities, SFO Magazine, as well as many others. And I'm quoted on a regular basis by Reuters, Dow Jones, Associated Press, International Herald Tribune. I've got 2 books out, Essentials of Foreign Exchange Trading, working on my 3rd one, actually. So Essentials of Foreign Exchange Trading, 2009, and Essentials of Technical Analysis for Financial Markets, 2010, both published by John Wiley & Sons. Also, a DVD set that I did in conjunction with FXStreet.com that I think you might enjoy. It's called High Probability Trend Following in the Forex Market. You'll be able to find that at FXStreet.com. Okay, great. So let's get started real quick. It's enough about me. Now, let's talk about some of you who've sat in on my prior webinars may be familiar with what I'm talking about here, but I'm going to show you a lot of different examples to help illustrate exactly what my trading principles are. So overall, from a broad perspective, what I'm looking to do in any Forex situation, I'm looking to seek high probability trading opportunities. And what do I mean by that? Well, high probability trading opportunities is just the opposite of low probability trading opportunities. Now, a lot of people, and that may seem very obvious, very clear, but not to a lot of people, because for example, when I talk about low probability trading opportunities, I'm talking about the many people who get into a trade just because they have a feeling that it's going to go a certain way, or that, for example, the euro dollar is going down, so I'm looking to get short just because I'm feeling that it's looking heavy. and it's going to go down. So I'm going to start shorting it. That to me is a low probability type of approach to trading. Now, what do I mean by high probability? Well, I'm looking for evidence, or at least some type of indication that, in fact, this currency pair is going in my favor, or going in this particular direction, and in fact, this is a good place to get into this trade, or this is a good place to get out of this trade. Okay, I'm looking for a preponderance of evidence that creates a high probability trading situation, rather than saying I'm feeling like this is going down, or I'm feeling like this is going up, and therefore I'm getting into the trade. Okay, so overall, it's to seek high probability opportunities. Now, if you take a look at the bottom here, let me just take a look at these questions. I'm going to try to get to the questions towards the end, if you don't mind. But if you take a look towards the bottom of this PowerPoint presentation here, you see that overall, identify where pullbacks potentially end. Okay, and that I think is the overarching type of approach that I'm looking for. The real art and science of trend following, the trend following approach to trading. And I talk about this a lot, and those of you who've heard me speak before know that I'm a trend following type of trader. Okay, now if you are a trend following type of trader, the real art and science, from my perspective, of trading in any market, including the Forex market, is to try and identify where and when a pullback or a retracement or a correction will end and start going in the direction of the overall trend. So that is my primary philosophy there. Okay, so once again, when you're trading with the trend, the best place to get into a trade within a trend is to look for pullbacks or retracements or corrections, but then to find when those pullbacks, retracements, corrections end and start going in the direction of the trend once again. So that is my overarching principle right there. Now, how do I do this? Well, first of all, I'm looking at trend, obviously, as you can see here. Trend is extremely important. I'm looking, and I'm going to show you exactly how I talk about and how I approach trend on the currency pairs. Number two, we have strength and weakness pairing. Okay, so if you pair the strong currencies with the weak currencies, then you have a higher probability opportunity to get into a trade that has a strong directional bias. Number three, I'm looking at multiple time frames. Number four, I'm looking at confluence. Okay, confluence simply means the coming together of different factors in your trade that come together to show you that, in fact, this looks like, this is the directional bias, and support and resistance levels are here, and therefore this looks like a higher probability trade. I'll talk about that in a minute. And then we have, of course, support and resistance, as you all should be familiar with. We have consolidation breakouts and chart patterns, which are very closely linked. Okay? So once again, overall, I like to seek high probability opportunities, and I'm looking from a trend following perspective to identify where pullbacks or retracements or corrections potentially end. I'm going to show you this on the euro-dollar chart, on the pound-dollar chart, on the dollar-Swiss chart, etc. Okay, so let's get going here. Let me go through these one by one real quick, and then I'll show you my lot charts. Okay, so trend. Well, first of all, as I always say, currencies tend to trend often and for prolonged periods. We see that right on the charts as we speak, okay, and as I'll show you in a second. We see that on the major currency pairs. With the exception of dollar-yen, pretty much all of the major currency pairs are strongly trending right now. Okay, we may be in pullbacks right now, but we are in strong trends on all the major currency pairs with the exception of dollar-yen, in my opinion. Okay, now, why do we trade with the trend? Well, first, we want to take the path of least resistance. We want to ride the market momentum. And that only makes sense. It makes a lot of sense to me. Now, wherever possible, and this is key here, wherever possible within a trend, I will trade with a strong trend. Okay? If there's a trend, I will trade with it. If I see an opportunity, that's not to say that if there's a trend, I will always be trading with that trend. No, I'm, within a trend, well, the trend is the first criterion. But once there is a trend, then I'm going to be looking for opportunities to trade within that trend. If there are no opportunities to trade within that trend, then I will not be trading within that trend. Okay, so I'm looking for opportunities. So wherever possible, I'm going to trade with a strong trend. By the same token, if there's a strong trend, I will always avoid trading against that strong trend. Okay? So once again, if there's a strong trend, I will sometimes trade with that trend if I find an opportunity. If there's a strong trend, I will always avoid trading against that strong trend. And that's just one of my key principles for trading, for my particular approach to trading in the Forex market. Now, what I'm mainly looking for is I'm mainly looking to trade, consolidations, breakouts, retracements, breakouts in the direction of the trend. So anytime you see any type of consolidation, whether it's a chart pattern or any type of sideways consolidation within a strong trend, or any type of pullback retracement correction within a strong trend, I'm looking to play breakouts on those trends in the direction of the trend. Okay. Now, as most trend followers do, I'm looking to target substantial profits during prolonged trends to more than make up for the smaller controlled losses that you'll always have, in any type of trading that you do. I know many people come to me and say it's really frustrating taking all these whipsaw losses, and absolutely, but you have to, within your trading plan, you have to take that into consideration. These losses, okay? Once you take that into your trading plan consideration, then you could trade much more effectively, and and you could start to achieve and start to target consistent profitability. You have to take into consideration that you will have losses and to try to minimize those losses. Okay, so that's trend. Now, number two, within my umbrella of trading or trying to seek high probability trading opportunities, we talk about strength-weakness pairing, and I've talked about this on many occasions, and some of you may have heard me talk about this, strength-weakness pairing. Well, the key aspect of trading currencies is that they're not traded as single entities, as all of you may know if you've traded Forex at all. They're traded in pairs, which means that you need to take into consideration that there are two entities in every pair. So whether you trade from a technical perspective, a fundamental perspective, or any other perspective that you're trading, you need to take into consideration that there are two entities, and there are two opposing entities, okay? So once again, unlike any other major financial market, spot currencies can only be traded in pairs. Now this to me is a distinct advantage. Why? Well, first of all, when you're trading, and you've probably heard many people say this before, when you're trading stocks, or you're trading a stock, or you're trading, you're trading an ETF, or you're trading a futures contract, or what have you, what you're basically looking for, or what many people are looking for, is to trade with strength, and trade long on strength, and to trade short on weakness. In other words, to buy strength and to sell weakness. Okay. Now, in the Forex market, it's much different because of these two entities, the euro against the US dollar, the dollar against the Japanese yen, and what have you. Because of the fact that they're two entities, you want to be able to, and two opposing entities, you want to be able to trade strength or to buy strength while simultaneously selling weakness. And I talk about this a lot because it's so important. Now, in the Forex market, you have the chance to buy strength while simultaneously selling weakness. So, for example, if, let's say, the dollar Swiss, which has been very strong lately, the dollar Swiss, if you're looking to trade, the strength of the dollar with the weakness of the Swiss, then you would be looking to trade dollar Swiss. If, however, you're just looking to trade dollar strength, then and you don't really know, or you don't really have any opinion on the Swiss franc, let's say, for example, then trading long the dollar Swiss is probably not a good idea. Okay, by the same token, if, for example, euro dollar, if you're bullish on the euro, but you don't really have, let's say, this is just an example, if you're bullish on the euro, but you, or let's say bearish on the euro, but you have really no opinion about the US dollar, then it's probably not great reasoning to be going short the euro dollar just because you think the euro is weak and will get weaker. So you have to take into consideration both currencies. Now, if you are able to pinpoint a strong currency and a weak currency, and you put them together, then buying or selling that particular currency pair, it essentially magnifies the directional potential of that position. Why do I say that? Well, first of all, if you have a stock and you think that it's going to get stronger, you think it's strong, it's going to get stronger, then you could buy that stock. If you look at a currency pair and you look at the first currency and you think that's going to get stronger, and then the second currency you think it's going to get weaker, you are essentially doubling your directional bias. Because whenever you buy a currency pair, you are going long the first while simultaneously going short the second. So you are essentially doubling or magnifying your directional position. By the same token, if you're going short a currency pair, you're essentially going short the first, long the second. So you are doubling or magnifying your potential positioning, directional position, as opposed to if you're just trading a single entity like a stock or futures contract. Okay. Now, how do I measure strength and weakness? Well, I measure strength and weakness primarily by measuring percentage price change against a basket of single currencies. Now, a lot of people may ask me, or a lot of people do ask me, do you trade the U.S. dollar index? Because it is essentially the U.S. dollar against a basket of currencies. Well, I don't really, because first of all, the U.S. dollar index is heavily weighted towards the euro. It is more than 60%. More than 60% of the basket in the U.S. dollar index is weighted towards the euro, and that for me really weights it a little bit too much. Now, second of all, the U.S. dollar index is only a measure of the U.S. dollar strength. Now, what I do is different. I'm taking each individual currency and I'm trading them, or I'm measuring them against all the other major currencies. So I have an individual strength weakness meter for each individual currency rather than just the U.S. dollar. Okay? Now, once you identify the strongest currency and the weakest currency, you could pair the strongest with the weakest to result in a robust trading position. So let's say, once again, let's say dollar Swiss, because that's a good example. Let's say that the U.S. dollar is strong, which at this point on an overall basis is, and the Swiss franc is weak and getting weaker, which, at this point it is on an overall basis. So U.S. dollar against Swiss franc, that would be a good potential positioning to go long dollar Swiss. Okay? Now, multiple time frames. I use multiple time frames. Why do I use multiple time frames? I'm looking to seek agreement amongst the time frames. Okay? So, I don't know if any of you have seen my multiple time frame trading strategies, specific strategy that I use. Well, essentially what it does is it's looking for agreement amongst the different time frames. 3 different time frames. Now, essentially what I'm doing is I'm looking on the longest term time frame for the trend time frame, and then only trading in the direction of the trend time frame. And on the other 2 time frames, I'm looking for recoveries or pullbacks and then breakouts in the direction of the trend. Okay, so what I initially said was that the overarching principle is I'm looking for the end of a correction, the end of a pullback, the end of a retracement. And that's what this multiple time frame strategy is essentially trying to do. Okay? So, now how do you combine multiple time frames with strength weakness? Well, here I have a very simplified diagram here. Very, very simplistic, but just an example, just to give you an illustration of what I'm talking about. If, for example, on the weekly chart, daily chart, hourly chart, the euro is strong, which is not the case right now, but let's say they're all strong. On the weekly chart, daily chart, hourly chart, the U.S. dollar, at the same time, they're all weak. What is the conclusion to buy euro dollar? Now, a lot of people will ask me, a lot of people have asked me, if this is the case, if let's say, you have 3 different time frames that are showing the euro the strongest and the U.S. dollar the weakest, then aren't you looking at a potential exhaustion of the strength or the weakness, the corresponding strength of the euro dollar? The corresponding strength of the euro and the weakness of the U.S. dollar. Well, not necessarily. If you are looking for agreement amongst these different time frames, what you're essentially saying is that I'm looking at strength on a long-term time frame, On on the intermediate time frame, I'm looking for a recovery, perhaps a recovery of a pullback. Okay, and then on the shortest term time frame, I'm looking for a breakout in the direction of the trend. So if all those agree, if all three time frames agree, I'm looking basically at my multiple time frames trading strategy, which is, looking for the end of a pullback, looking for the end of retracement, and for price to once again move in the direction of the trend. Okay, let's move forward. Real quick, Confluence. I know a lot of you have heard me talk about this, and I'm going to show you this on the euro-dollar chart. But Confluence is, wherever possible, you're looking for areas where more than one factor are providing rationale for a trade entry, whether it's a combination of Fibonacci level and a trend line and a support resistance level and moving average or what have you. When they come together, they're perhaps providing you with a stronger rationale for getting to a trade, whether it's a bounce off the support resistance level or a breakout. A confluence of different factors helps you get into a better, a higher probability trade. Why? Because, the more support, the more factors that are telling you that yes, this is perhaps the direction it's going, and, the more factors that are telling you that, in my mind, the higher probability that trade will tend to be. Now, why is that the case? Why does Confluence create a higher probability trade? Well, I talk a lot about the self-fulfilling prophecy where, where, for example, the 61.8% Fibonacci retracement. Why is it so important? Not because it's a magical number. Okay, I do not believe in magical numbers. Why does the 61.8% Fibonacci retracement often work? Well, from my perspective, it often works because of the fact that many traders and many large traders, as well as smaller traders, are looking at that level and perhaps acting upon that level. Okay, and therefore you'll often find events occurring at that level. Okay, now in terms of Confluence, if you have several different factors, let's say you have that 61.8% Fibonacci retracement, you also have a key support resistance level at 140, let's say, on euro-dollar. You also have a moving average there. Okay, now the more factors you have there, the more traders are looking at those particular factors, and therefore the more chance that something of, some significant event can occur at those levels. Therefore, Confluence tends to make for a higher probability trade. So hopefully you understood that. I don't know if I explained it too well, but okay, so that's Confluence. Now, examples of Confluence that I often show, let's say, for example, a major 61.8% Fibonacci level coinciding with a minor 38.2% Fib level. That's a Confluence. A horizontal support level coinciding with the uptrend support line. And we'll see that on the euro-dollar right around the 140 level. A moving average also coinciding with the uptrend support line, what have you. Okay? Support and resistance, etc. Now, a lot of people ask me, what are, how do I choose my support and resistance levels? Support is a price floor, resistance is a price ceiling, in case you're not familiar with support and resistance. But anyway, I'm looking for bounces or breakouts of support and resistance levels. But how do I choose my support and resistance levels? Well, very simply. Number one, I'm looking for previous turns in the market. Do you see this bold sentence right here? I'm looking for previous turns in the market. Okay, that will make for strong support or resistance. I'm looking for psychological levels. What does that mean? I'm looking for round numbers. Okay, I'll show you this on the euro-dollar in a minute. I'm looking for Fibonacci levels. I'm looking for moving averages. Okay, all of these will contribute to my choosing a particular level as a key support and resistance level that I will use in my trading. Okay, so once again, this is pretty much in the, in the order of importance. Number one, previous turns. Number two, psychological levels. Number three, Fibonacci. Number four, moving averages. There are also others, but those are the most important ones. Okay, now within the context of a trend, what am I looking for? I'm looking for consolidation breakouts or retracement breakouts back in the direction of the trend, like I mentioned. Okay, now these consolidations or retracements tend to be in the form of chart patterns, and they often are. I'm going to show you on the dollar Swiss in a second how extremely well formed and technical this current new uptrend is in dollar Swiss, and how these chart patterns helped identify retracements, corrections, where breakouts occurred in the direction of the trend, and those were high probability potential entries into this new uptrend that we're seeing in dollar Swiss. Okay, so basically, retracements, corrections, they can be short-term counter-trend moves or consolidations, short-term counter-trend moves in the direction of the trend. And I'm looking to trade breakouts of those moves in the direction of the trend. These are some of the chart patterns. If you've ever heard me speak, you know that I don't really care about names of chart patterns. I really don't care about, encyclopedia of chart patterns, although I've read many especially if you've taken a look at Bulkowski's chart pattern encyclopedia. It's very, very good. However, I'm not concerned with the names, and I'm not concerned with knowing 1,000 different chart patterns. I'm concerned with what the chart patterns represent. And to me, what they represent are either pullbacks or consolidations within the direction of the trend. And that's what I'm looking to trade. Okay. Those are chart patterns. Now let's go to the charts real quick. I'll show you exactly what I'm looking at. Okay. Hopefully you can see my charts here. Okay, this is a euro dollar daily chart. Okay, we saw some more pullback today. We're seeing, before we had I did a prior webinar this morning with FXDD, but we saw that price action, this daily candle was red, and then now it's turning green. We're seeing a big move to the upside in euro dollar. Okay, however, if you take a look at this euro dollar daily chart, you'll see very, very clearly, if there was ever a better downtrend or a new downtrend than we're seeing right now, then I would be hard pressed to find, a better formed trend than this. If you take a look at this, okay, let me give you some background. Let me pull out a little bit. Okay, now let me give you some background on this. I've got this uptrend here. Okay, so we had this wedge situation. Now we had this sideways consolidation. Okay, for quite some time on this euro dollar daily chart. Admittedly, it was a very frustrating consolidation. Okay, so during the course of that consolidation, I'm looking for breakouts. I'm looking to break this consolidation, whether it continues with the uptrend, the overall, very shallow uptrend that we see here, or if it breaks this uptrend. Now, the first sign that it broke, and let me zoom in a little bit. The first sign that it broke was right here. Okay, we have this wedge formation. Okay, this is a pretty well-defined wedge formation. It breaks to the downside there. Okay, on that breakdown, we're looking at 140 as support. Okay, 140. Now, if you take a look at 140 right here, this is a huge confluence of support. Let me zoom out so you can take a better look. Okay, so once again, 140 is right here. Okay, if you take a look here, right here, 140. Now, if you look at this confluence right here, it was huge. Now, we have not only the 140 psychological level, okay, psychological round number, huge psychological round number, but 140 was also a prior support and resistance level, a very key one. If you take a look back here, support, resistance, etc. Okay, so we had a strong support resistance level. We had the 140 psychological number. We had the 200 period simple moving average right here. We have the 61.8% Fibonacci retracement of this run right here. Okay, so already there we have three different factors. Okay, and then we see a breakdown. Now, once again, when I'm looking for a confluence of support or resistance, I'm looking for either a bounce or a breakdown. If there's a breakout or a breakdown of support or resistance, what does that represent? That means that price action, in most cases, usually, price action should respect a strong support or resistance level. If it does not respect a strong support or resistance level, that means, or that gives some indication that perhaps you will have enough momentum on the breakout to follow through. So, as we see here, strong support resistance. There are four different factors here. Moving average, 140 psychological number, 140 being strong prior resistance, support resistance, and then 61.8% Fibonacci number, we see a break to the downside, a very nice break to the downside. On that break to the downside, my target was 137.50. Okay, it hit that pretty well. Okay, and then below that, my target was 135. So all of these support resistance levels and targets were chosen based upon their their use as prior support resistance levels, Fibonacci levels, etc. So I have all these targets to the downside on euro dollar. So we saw a break to the downside below 137.50. It broke, and then it hit my target at 135. Let me zoom in a little bit. Okay, so it hit my target at 135, and it respected 135. Okay, 135, if you take a look back here, was prior support resistance. Okay, so it hit there, then it pulled back. As any trend should, it pulls back. And then at that point, you're looking for, some type of recovery of the trend. In this case, it could have been, a breakout. This is sort of a flag formation here, what do you call it? Inverted flag formation. So you're looking for some type of breakout to the downside. Okay. So on a breakout, on a breakdown below 135, I was looking for 133. So it breaks down, hits 135, pulls back. It goes back down, re-breaks below 135, does not have enough, downward momentum to go further, pulls back again, and then it hits my target 135. Now, this is a very well-formed downtrend. We're seeing pullbacks within this very strong and steep downtrend, and I'll show you an even better downtrend on pound dollar, but it hits, right now it's right around this level as a resistance, and looking further downside, I'm looking for 130 to the downside. 130 being a key psychological number to the downside as my target. I'm fully expecting this downtrend to continue if price action does not tell me otherwise, but right now we are seeing a very strong downtrend. I'm looking for further downside on euro dollar. Okay, and the trick, as I mentioned, is to find when any type of retracement or pullback ends and further, goes back further in the direction of the trend. Okay, let's show pound dollar real quick. Let me zoom out a little to show you the big picture here. This is a really, really good chart here as well, and this is even stronger, arguably, than the euro dollar chart. We have an uptrend here. Okay, so we have that uptrend there. We could draw our Fibonacci retracement levels there. Also, we could draw, our prior turns and also our psychological levels, etc. So now we have this. Once it broke down, it pulled back. We have this wedge formation, much like we saw in the euro dollar. Very nice wedge formation and a breakdown there. Okay, from that breakdown, several different downside targets. 160 to the downside as key. Look at this, key support resistance. Okay. 160 being key support resistance, also a key psychological number, and we saw that breakdown. That was a target there. It broke down further. I had 157.50, and that was my target down there as well, prior support resistance, and then a breakdown from there to one. This is very, very technical. Okay, even more technical than this is on the dollar Swiss, but let me first show you this. Pound dollar, it broke down below 157.50, shooting for 155. Okay, 155 being as you can see here, very strong, prior support resistance. Also, very importantly, this is not only a key 155. It's not only a key prior support resistance level. It's also a key psychological number. And also, if you take this run, this uptrend from down here all the way up here, what is this but the 50% Fibonacci retracement? Okay, 50% of this move is right here around 155. So my key target there. Breakdown below 155, looking for let's see. I had an intermediate one there. I think it's it's right here, 153.40. Okay, if you take, this is extremely important here. If you take a look, 153.40. My charts are a little small here because just because of the software, but 153.40, 153.30, 153.40. Key target, key support and resistance level. Because why? You take a look at my crosshairs back here. I'm moving back here. Look at this. Extremely good support. Right here, once again, right here. Okay? Not only that, though. Okay? This is just a key support level. Also, it's near the 161.8% Fibonacci extension, but most of all, it's because of this key support here. 153.40 level was my target. Hit the target, double tested, pulled back. On the pullback, 157.50, support becomes resistance. That was my resistance to the upside. And then it moved back down, rebroke below 155. Once again, my target 153.40. And then below there, my target is 152. Why 152? Well, prior support resistance, also a key psychological number, also 61.8% of this major run right here. Okay, so the 50% retracement was at 155. The 61.8% was at 152. That's my target currently still. We're seeing a bit of a pullback here, but pullbacks notwithstanding, my target is still at 152 to the downside, and then possibly below that 150. If we see a further continuation of the downtrend, which I'm looking for and I'm expecting, unless price tells me, otherwise, I'm looking for further downside here. A breakdown below 152. I'm looking for 150 on pound dollar. Interestingly enough, if you take a look at this pound dollar, this wedge run, what I call a wedge run right here, I'm measuring the bottom of the wedge to the top of the wedge. The 161.8% Fibonacci extension is down here where price action just hit today. Coincidence, not a coincidence, whatever it is, that's that's the 161.8% right around here, right around the 152.50 area or so, which price action just hit. Okay. Question: you're not using a stochastics indicator. Why? My stochastics indicator is right down here, but as I always mention in many of my webinars, stochastics I use for specific reasons. And whenever I use stochastics, it's only for confirmation or warnings of potential turns within a trend. And I use the stochastics very often in my specific multiple time frame trading approach, but not necessarily do I always use it in all my analysis. And right now I'm not using it. Well, right now anyway, there's not much to say about the stochastics because it's right in the middle. And if you've ever heard me speak before or any of my analysis, if it's in the middle between overbought and oversold, then I'm not going to be really paying attention to it. Only within the direction of a trend, if I'm looking for a turn back in the direction of the trend, will I pay attention to it, and only if the stochastics are in overbought or oversold. Okay? So hopefully that answers that question. Okay, so once again, looking for further downside, although we're seeing somewhat of a pullback here in pound dollar, I'm looking for further downside in 152, 150 on pound dollar. Let's look at dollar Swiss, my favorite chart by far, especially recently, and in the past several months and for quite some time. Okay, so take a look at this dollar Swiss chart. This is a daily dollar Swiss chart. Excellent, extremely technical chart, as you can see here. These support and resistance levels have been extremely well followed by price, okay, and well respected by price. So you can see this downtrend occurring from June of 2010 all the way down up to this breakout of this trend in the beginning of September of 2011, this year. So we have this move that down, and then once that breakout occurred, this was a clean breakout, a very, very nice breakout. I had resistance here, support resistance here at 85.50. As you can see here, support becomes resistance, continues as resistance. That was my target on a breakout above this trend line here. Okay, breakout above the trend line, and then a breakout above there. I was targeting 89. You can take a look at my analysis from the last several weeks and months. Targeting 89. Okay, 89. It hits 89. Well respected. It turns down at 89. It pulls back at 89. Okay, look at 89. Support, resistance. Okay, so you look at 89. It breaks out above there. I was targeting on a breakout above 89. I'm targeting 93. Okay, so 93. Why? Once again, support resistance, prior support resistance, good target there on a potential break to the upside. It pulls back to 89. If you take a look here, once again, 89 held. Support becomes resistance, stays at resistance, becomes support. Excellent, extremely technical moves right there. It breaks to the upside, pulls back as support, and then moves to the upside. It has just hit my target at 93. Okay, 93. We've seen a pullback today. But if there's a breakout above 93, what am I looking for? I'm looking for 95. Why 95? Prior support resistance, and also 161.8% Fibonacci extension of this run right here, of this bearish run right here. Okay, so all these, it's moving in steps. It's moving extremely technically. It looks like a really good uptrend. Moves to the upside. Minor pullbacks, moves to the upside, minor pullbacks, etc. Okay, 161.8% is my next target to the upside. Tom, yeah, I do watch for divergence as well. I look for divergence on, price oscillator divergence on my stochastics, as well as sometimes on MACD and and others. But right now, yeah, I'm not seeing much in the way of divergence. Although you could say that possibly we have divergence right now. But divergence is only a warning or a confirmation for me, not actually a primary trading tool. Okay, I think I'm running out of time here, but let me go quickly here. So I'm looking to break to the upside towards 95, and that's essentially what I'm looking at. Just a side note here, moving averages, how do I use them? I use them as I showed you on euro-dollar as support and resistance within a trend. On dollar Swiss, as we can see here, this 50-period simple moving average acted very well in a strong downtrend, as we see here, as resistance. Okay, and then we had a break to the upside, but it worked very well here as within strong resistance. And then also the 100-period moving average also work very often as support resistance, as will the 200-period moving average. Aussie dollar. Let's take a quick look at Aussie dollar. Same type of thing I'm looking here. We had a wedge again. Okay, we had a really steep wedge break to the downside. It broke through successive levels. I'm looking for breakouts. I'm looking for, in this case, breakdowns below consolidations, below pullbacks. And looking for, and as you can see here, 94, it hit it on the mark. 94, why 94? Let me show you right here. 94 on Aussie dollar was a key level. It was key prior resistance. Prior resistance becomes support, okay? And then we had a very nice respect of this support. It's also the 161.8% Fibonacci retracement of this run right here. So we have extremely technical here as well. Look at this. Very, very nice there. It pulls back. I'm looking for, if there's a break below 94, possibility for, a move eventually down to 90 if there's further downside on this strong downtrend on Aussie dollar. Dollar Canada. This is a daily chart of dollar Canada. Phenomenal moves in the past a couple of weeks to the upside. Currently targeting 261.8%, around the 107 level. Just shy of that, pulled back, but breaking through successive support and successive resistance levels. Okay, let me quickly go through this. Dollar yen, as I showed you, was very, very. Well, maybe I didn't show you, but dollar yen right here. There's a 4-hour chart of dollar yen. Not a lot of opportunities that I'm looking at. Just a straight consolidation. Chart patterns are not showing much. There's always a danger of a potential Bank of Japan intervention. Although the past several times they tried the intervention, has not been very successful at all. But I'm not looking at a lot of opportunities on dollar yen because of this very frustrating sideways consolidation. Until and unless this consolidation is broken, not much in the way I'm looking in the way of dollar yen opportunities. Although we see on the euro yen. The yen crosses, euro yen, pound yen, seeing some good downside moves on both of these, mainly because of the weakness of the euro and the weakness of the pound. Last couple of things I want to show you is gold. Okay, take a look at gold. You guys remember the phenomenal move to the downside, this huge plummet. Hopefully you guys didn't lose too much money on this, but a huge plummet to the downside, broke below successive levels. I was looking for a pullback in gold, not to this extent. We saw a huge move to the downside. From a technical perspective, though, what are we looking at here? This move to the downside formed what we call a hammer candle right here. Okay, what does a hammer candle represent? It represents rejection near the lows. It sort of hit this 200 period simple moving average as support. It formed a nice hammer candle here, which means it went all the way down, closed near the highs. It was rejected, it failed near the lows, went back near the highs, and for now though. We're looking at a lot of consolidation from here. So not much in the way of directional clues here. although we do have this rejection near the lows on gold, and possibly trying for some type of a recovery or a little bit of recovery, but right now in consolidation mode. Same thing we're seeing on silver. Silver, we have this really, really nice hammer candle here. Huge drop in silver. Okay, silver was not nearly as bullish as gold, but anyway, it experienced a huge drop, and it hit this level right here with this hammer candle. Really nice hammer candle, really tiny body, very long lower wick, rejected near the lows, trying to climb back up. Right now we're in a consolidation, but this is giving us some clues that we're getting rejection near the lows, both on gold and silver. Let me see if there are any questions here real quick. Okay. Levels were validated to work even before fibs became broadly popular. Okay, there are a lot of people that really believe in fibs and how they were, how they work even without the self-fulfilling prophecy, and it could be, but I'm attributing mainly their effectiveness to the self-fulfilling prophecy. Perhaps they do have magical properties. I just don't really subscribe to that. Let me see. Do you watch for divergence? Do you pick your trades mainly on the daily chart? Ghana, I pick my trades primarily on the daily charts, the 4-hour charts, and sometimes the 1-hour charts. I'm more of a longer-term trader, but I'm always looking at the daily. Okay, always looking at the daily, and sometimes I'll look for entries on my 4-hour and my 1-hour charts. Erwin, how much credence do you place on weekly pivots, especially since dollar Swiss has hit weekly R2, but hasn't closed above it? Erwin, great question there. I don't have my pivot points, my weekly, especially the weekly pivot points. I usually use daily pivot points, but I don't have the pivot points there. But pivot points are also another way to look at support and resistance along with Fibonacci. Again, not for me any magical properties, just that a lot of people traditionally have been looking at pivots as well. But if you say that that's the case, I don't put that much credence in pivots. Rob, will you ever have a trade room? Yes, I do a lot of seminars with live trading, but it's harder with the way I trade because of the fact that I'm using longer-term charts, and we're probably just going to be sitting around there. I've done a lot of it, and I usually, when I do that type of trading, I go down to the shorter-term charts. But since I'm, much more of a longer-term trader, if you want to sit in with me on a, for a long time, like all day long, then maybe I'll set something up like that. But it can get a bit boring, especially the way, the way I'm looking at daily charts, 4-hour charts, etc. Rob, what is my Twitter address? It's Twitter address is James Chen FX. James Chen FX. JAMESCHEN FX. Money Magnet, I missed your projection for the euro. What is your opinion on today's ECB actions? Okay. My projection on the euro. And I don't really have an opinion on today's ECB actions. But my projection for the euro, as I mentioned, I'm looking for 130 longer term, okay, and especially if there's a break to the downside. We're seeing a pullback here, but I'm looking for further downtrend here, especially. I mean, we have a pullback here, but I'm looking for further downside down to to break below 133 again, and then possibly to 130 on euro dollar, and overall bearish on all of these currencies against the dollar. Including euro dollar, pound dollar, Aussie dollar, and then bullish on Swiss, etc. Okay, so hopefully you got something out of this webinar. And let me take a look here real quick. Okay, let me quickly give you, I don't have it here, but let me quickly give you my email address. Okay, my email address is, for those of you who are not familiar, you know, I just moved over to FXDD about 4 months ago. This is my new email address. Okay, jchen@fxdd.com. And if you have any questions whatsoever about what I brought up today, or any questions at all, please feel free to contact me. And I would like to thank all of you for your time today. And you're welcome to, you know, to give me a ring or give me an email at any time. And I look forward to the next webinar here at FX Street. Thank you very much, everyone.